G'day guys, welcome back to the Devon Toogan Investing channel. Today we're going to have a look at when you should think about selling a stock, and I'm going to give you 5 different situations when you should consider selling a stock. Now we spend a lot of time thinking about when we should look at buying a stock. However, I feel like when we should sell a stock, this sort of topic gets neglected, so that's why I'm going to go over it today in this video. Now before we go any further guys, please go and subscribe to my channel, please like this video, and let's get straight into it right now. Now the first reason you might consider selling a stock is if that stock is extremely overvalued. And by extremely overvalued, I mean 3 times or more the intrinsic value. So let's say you own a stock and you believe it's worth about $10 billion. Well, if it's worth say 30 billion or higher, it might be a good time to take profits or sell the whole position. Look, as the stock increases and the valuation gets raised further and further above its intrinsic value, the more risky the stock becomes, as stocks over the long term tend to regress back to their mean and towards what the market thinks its earnings are going to be in the future. However, don't get it confused, right? You don't want to sell your stock if it's 10% up, 15% up. If you own a great business, let it run. This only goes if the stock is crazy overvalued, not just a little bit, but crazy. Now, the second reason here is really important. It's probably one of the most important reasons, and it can save you a lot of money. So the second reason is you can sell a stock if your original thesis on why you bought the stock has changed, or if the business is no longer great. So this could be something to do with the management. Let's say you don't like the way the management's going with the company. Let's say, let's just say competition comes and breaks down the moat of the company, the competitive advantage. That could be a reason why the business is no longer great. Let's say your thesis relied on a certain event happening and that event does not occur. Well, that could be a reason why you could sell, because that is now a change in your original thesis and why you bought the stock. I think it's really important to consider this reason, and it can stop you from holding pretty much a falling knife. What it does is, let's say like some bad news comes out and you're like, I think this is going to change the long-term prospects of the business. I'll repeat again, the long-term, not the short-term, the long-term prospects of the business. If the long-term prospects of the business are affected, you probably want to sell. However, don't get it confused, because if it's a short-term problem with the business, this could be a great buying opportunity. Now, reason 3 is probably the worst reason on this list to sell, but sometimes things in life happen and sometimes you just need to do it. So reason 3 is you can sell if you need the money for a personal reason. And by personal reason, I'm not talking about going on a fancy holiday or buying a new fancy car or anything like that. I'm talking about if you need it for something really important, such as paying off a high interest debt, or maybe you have a medical emergency, or you just really need the funds for whatever reason, but it's crucial that you have it. This isn't discretionary stuff like, I want to buy a new TV. We're talking, you have to do it. You're completely forced to do it. Now, you probably want to avoid this altogether by having quite a hefty emergency fund. But look, I can't ignore this reason. Sometimes things happen in life, and sometimes you need to sell your stocks to pay for something really important. Now, the fourth reason I have here is you can sell a stock if you find an opportunity that is at least 50% better. Now, what I mean by this is, let's say you have a stock and you believe that it's worth 10 billion and currently it's trading at 7.5 billion. But let's say you find another stock and you think it's worth 10 billion, but it's trading at 5 billion. So that would be 50% better than the first stock. Now, if you have this is probably a good reason why you could sell out of one position and transfer it into that better opportunity. But you probably don't want to fall into the trap of selling and buying a new stock if it's less than 50% better. Because if it's less than 50% better, it's you probably don't want to get rid of your original thesis for that. And you probably want to focus your portfolio on better opportunities, and it's probably not worth your time. Because who knows, if you think it's only less than 50% better, well, you might end up selling the good stock and buying the bad stock. I think with this reason 4, I think you want to stick to this hard, fast 50% better rule. Now, reason 5, this is the best reason of all. You can sell a stock if you meet your investing/life goals. And what I mean by this is you don't want to get greedy. Like, let's say you come into life-changing money. It's going to make your life so much better. But you get greedy and you hold on, and then you miss out on reaching one of your goals. And I'm talking goals such as maybe you've got enough money now to buy your house. Maybe you've got enough money to pay off the rest of your mortgage. Maybe you got enough money to pay the rest of let's say your student loan, or anything like that. Anything that you've really set your mind towards, and you don't want to get to that stage and then lose it just because you were trying to eke out a little bit more. Set your goals up, go for your goals. Once you achieve your goals, I think it's alright if you sell some. But anyway, guys, this is my 5 reasons on why you should sell a stock. I hope you enjoyed the video. I remind you one more time, please subscribe, please like, and I'll see you in the next video.